Hello, this is another video regarding 453 installment sales and using that structure when you sell your business or when you sell a piece of real estate. You've got an investment and you're trying to defer your taxes. So the previous video talked a lot about how we can use the 453 to avoid the problems with the 1031 exchange, all the rules, all the requirements, all the timelines, all the valuations, all that kind of stuff. And I want to focus on two different aspects. Number one, the tax deferral part. And number two, I want to talk about keeping the cash, right? So there's a couple things involved here. Let's talk first about tax deferral. In a business sale or a real estate sale, what we can do under 453 when we structure it correctly is to have tax deferral for up to 30 years. So it's a max 30 years. You can structure your deal in a different way and have that a lower amount of time, whatever you want, right? So of course you can always pay the tax immediately, or you can defer it to 30 years. So anything in between also works. So depending on your investment strategy and your other financial planning that's going on, your other investments that are going on, how your other portfolio assets are performing, you may want to stagger that tax out. You may want to pay a little bit as you go. So we can set it up, say you want to do a 15-year deal and just pay a little bit of that capital gains over the 15 years. We can set it up that way. Or you can defer it, defer it the full 15 years. Or you can use some other time frame that you want in there. It really depends. It's flexible depending on the benefits that you're looking for in the deal. So tax deferral up to 30 years max, or structure it some other way that works for you. Again, controlling your tax payments are very critical, and coordinating it with your cash flow is critical. So that's one of course, the biggest problems with paying our taxes is having the cash flow and the liquidity when we want it, how we want it to pay our taxes when they're due. So this really helps balance that out for a taxpayer, and you've got a business or a piece of real estate that's getting sold. So that's deferral, right? So the first thing we dealt with, the last video at length, get out of the rules with 1031 exchanges if you need to or if you want to. Rescue that bad 1031 that's going bad for some unpredictable reason. Not that it's a wrong transaction, it's just having a problem that you want to avoid the capital gains tax on because it's failing for some reason. Second, defer the taxes, right? So one, no rules. Two, we want to defer the taxes. Number three, I want to talk about keeping the cash, right? So what we can do with a 453 installment sale is fund that transaction with a loan. And the way we do that is very powerful. And you structure the loan payment to coordinate with the interest coming off of the installment sale so that they wipe themselves out. So as a seller, you don't ever see the interest payment coming due from the loan. You don't see the interest payment coming off the installment sale. The fiduciary in the middle handles all that. It's invisible to you. It's handled behind the scenes. There's no paperwork, no reporting. There's no effort, zero. You don't have to even open an email once a year. So it's very simple, all handled administratively behind the scenes by the fiduciary. Now the loan that we're talking about is very powerful. It's the best kind of loan you can ever get, right? So think about this. You know, normally when we sign for a loan, we sign for it. That's called a personal guarantee or personal liability. With this kind of a loan, it's structured to be financed through the installment sale process, so it's a non-recourse loan. No personal liability, right? There are many kinds of non-recourse loans. A lot of times insurance companies make these, but they're usually for especially credit-worthy investors and borrowers, and it's hard to get a non-recourse loan, right? So this structure is so solid and so strong that it allows a non-recourse loan, and we arrange that through the whole process, and the fiduciary in the middle arranges it. And the only recourse on default is against that fiduciary for not making the payment and not having the money there when they're supposed to. So the fiduciary is the one that's holding the liability for your transaction, whether it's $500,000 or $20 million or $100 million transaction for a business sale. right, or a big portfolio of real estate being sold, it can be any number. That fiduciary in the middle is liable for it. So number one, you're getting your cash at closing, and it's a non-recourse loan. Non-recourse. That's the most beautiful words ever spoken in the English language when it comes to real estate investing. Non-recourse loan. Also, the loan is interest only, right? So there's no principal payments because, again, we're going to wash out your payment from the installment loan with the loan payment, so they just cancel each other out. And again, you don't want to have to pay the loan back until the end of the term. And if you've, say, deferred your installment sale on your taxes for 30 years, it would be a 30-year interest only, unsecured, non-recourse loan, right? So you don't have to sign a personal guarantee on this. You don't have to put up any assets, nothing. It's all going back to that fiduciary that's in the middle of the transaction, so that they're the ones who are liable for the loan and they're holding the money, right? So very key provision here. You get your money and you can do whatever you want with it. It may be part of your estate plan. It may be part that you want to diversify your investments out of real estate or into different kind of properties that you wouldn't have been able to do under a 1031 structure. It didn't fit, right? So I mentioned in the last video, we did one of these deals for a client, and the main thing was they just couldn't fit the rules to the 1031 into the structure and the deal that they wanted to go into. So by using the 453 structure, they were able to do the deal they wanted, get the returns they wanted, have the security they wanted, do the whole deal, make the investment you want. And you can use that money for any purpose. You can even take the family on a cruise around the world if you want to. Do whatever you want with that money, knowing that it's non-recourse, interest only, 30 years, or whatever the term is on the installment contract. We're gonna match that up for you, do all the calculations, so it's simple, easy, painless to you, no paperwork after the closing. It's very straightforward. So you get to use your money, get to use your cash for whatever purpose you might need it for that 30-year period. And of course, you think about that compounding value. Say you just invest that net sale price for 30 years at 7% in the S&P 500, right? You're going to grow triple probably or more than that over that time, and still the only tax liability you had was back here at the beginning when you had the 453 set up. That triggers the amount of tax at that point. So you get all that growth tax deferred for 30 years. That is powerful. That's a powerful use of your money. And that's, of course, the reason that people 1031 exchange or do any other kind of tax deferred, tax advantage strategy. Yeah, it could be with your self-directed IRA, as another example, your Roth IRA or solo 401k IRA. Different things. So number one, get out of the rules for 1031 exchange. Number two in this video, right, we talk about the tax deferral aspect. Number three in this video, talk about keeping the cash. The transaction costs, again, about 6.5%. So you're going to walk away, say you had $1 million of net asset price. At the end of the day, you're going to walk away with $935,000. That's way better than $750 of taxable money afterwards. And you can use that for 30 years for your investments. Use it for whatever you want. Diversify your portfolio. Do anything that you need to do. So lots of great benefits to the 453 structure. I hope that helps you. We'll have more on this important and exciting topic going forward. Look forward to talking to you. Thank you so much.